We will tell you the 9 financial goals you should reach by your 60s so that you could have a comfortable retirement. Watch this video till the end, or you may miss the crucial guidelines of these goals. Now let's start. Number 1. Consider purchasing a house. Owning a home can be a valuable asset that contributes to your financial well-being both in the present and in the future. When purchasing a home with a fixed-rate mortgage, the loan payment remains consistent over a span of 30 years. Without refinancing, you'll be stuck with the same mortgage payment for 30 years without any adjustments for inflation, which can be a significant burden on your finances. You don't receive that benefit when you're renting. Meanwhile, the value of your property will increase over time. As you make payments towards your mortgage, the value of your home equity gradually grows. Appreciation accelerates the growth in home equity. Home equity can be quite valuable in the future as there are multiple options available to convert it into cash. Consider leveraging your home equity or exploring the option of selling your current home and purchasing a more affordable one. Having those options is quite beneficial during your senior years, particularly if you find yourself in need of quickly accessing funds, and thus his goal of purchasing a home should be achieved by you before your 60s. Number 2. Settle outstanding credit card balances. Having credit card debt can significantly impact your financial well-being. These balances accumulate interest at rates significantly higher than what you can earn in a cash savings account. Over time, the total amount you spend on interest can become quite significant. In addition, the continuous interest charges deplete funds that could be used for living expenses or retirement savings. Simply put, allowing that debt to accumulate month after month hinders progress towards other financial objectives. Transitioning to a fixed income in retirement can make it challenging to cover interest charges and find extra cash to pay down your balances. Take action now to pay down your debts and avoid future financial burdens. Subscribe to our channel and also press the like button to know more amazing financial tips. Number 3. Following a budget consistently. Perhaps you're currently overseeing your finances without a budget in place. A lot of individuals do. You make an effort to stay within your income and occasionally achieve success. When you overspend, you typically rely on credit or dip into your savings to cover the extra expenses. This system can be effective while you're working. Retirement can be a more precarious time in terms of financial risk. During your pre-retirement years, it is common to receive salary increases and, in some cases, additional compensation such as bonuses. These can help increase your income, simplify debt repayment, and hide excessive spending. Your income and your retirement earnings will be largely balanced out by the rising costs of inflation. It is crucial to be meticulous in your spending habits. Understanding budgeting is crucial for a successful retirement. Number 4. Developing a strong sense of confidence as an investor. Anyone can save for retirement, regardless of their confidence or skill as an investor. With the right approach and consistent investments, you can set yourself up for financial success. However, having a strong understanding of investing fundamentals can greatly enhance your retirement prospects. Throughout your retirement, your financial goals will change and develop. Understanding concepts such as investment risk and asset allocation can give you the confidence to navigate through changing financial needs. Even with the assistance of a financial advisor, your ability to ask insightful questions and make informed decisions will greatly improve if you possess a solid understanding of investing. Number 5. Gaining the knowledge to effectively handle an emergency fund. You may be familiar with the commonly shared advice regarding emergency funds. It is important to aim for a cash savings balance that can comfortably cover 3 to 6 months of your cost for living. Understanding the guidance and putting it into action are two distinct matters. It's important to start practicing this skill now, especially since your work income allows you some room for error. Begin by setting aside a fixed amount of money each month into a cash savings account. Allow your deposits to accumulate gradually. Consider redirecting the deposit into your retirement plan temporarily if you reach your target goal. Once you tap into those funds for an emergency, it's important to reactivate your deposits and replenish your balance. Number 6. Saving a total of 10 times your annual salary. Are you curious about the amount required for retirement savings? I can save you the trouble of running multiple scenarios with various assumptions. It is recommended to aim for a savings balance that is equivalent to 10 times your annual salary. If your lifestyle doesn't change significantly, that should be a reasonable goal to aim for in order to have a comfortable retirement. You can adjust that number later as you gain traction in your savings. It is crucial to begin investing now rather than delaying due to uncertainty about the future. The length of time your money is invested plays a crucial role in determining the earnings potential of your retirement portfolio. By taking your retirement account seriously and investing early, you can make it easier to achieve and exceed your goal of 10 times your savings. Number 7. Generating additional sources of cash flow. Having a higher cash income during retirement can reduce your dependence on selling assets to cover your expenses. While selling assets can have its benefits, it's important to consider how it may impact your future earnings. It also exposes you to timing risk, which implies the possibility of selling right after a stock market crash. In that situation, the amount of cash you would receive from the sale would be reduced, purely because of the timing. Alternatively, if you were able to comfortably manage your expenses using Social Security and consistent dividend income, you would seldom need to liquidate your investments. You may choose to keep the majority of your wealth as a safety net and, in due course, pass it on to your loved ones. Number 8. Allocating funds specifically for healthcare expenses. According to Vanguard's calculations, your annual healthcare expenses during retirement are projected to range from $3,400 to $7,500. When you consider the impact of 30 years in healthcare inflation, your total expenses can easily reach 6 figures. Investing in a health savings account, or HAS, can be beneficial in managing these expenses as it allows for tax-free withdrawals specifically for healthcare expenses. If you have a high-deductible health insurance plan, or HDHP, you meet the requirements to contribute to a HAS. It would be wise to confirm this information with your benefits administrator or your coverage provider if you have private insurance. If you are unable to contribute to an HAS, one way to plan for healthcare and retirement is by boosting your 401k contributions. Number 9. Ensuring your children receive a quality education. It is important to plan for your children's college tuition ahead of time, especially if you have kids. Not taking timely action to plan for this significant expense can have a negative impact on your retirement. There is a possibility of accumulating debt or tapping into your retirement savings to pay for tuition. Starting to save and invest when your kids are very young is the most straightforward approach. Consider setting expectations that the children will attend junior college before transferring to a public, in-state university. Alternatively, you could establish a budget that aligns with your financial capabilities for the children. If they prefer a pricier experience, they can consider borrowing to cover the additional costs. Undoubtedly, these decisions can be quite challenging to make. However, it is crucial to keep in mind the significance of your future. It is important to ensure that you have sufficient funds for retirement, not only for your own well-being but also for the future of your children. Now watch the video appearing on the left side to know what are the tips you should follow to become rich And also subscribe to our channel to know more amazing financial tips and secrets to get rich. I highly recommend you to watch this video because it has important insights that you must know.